Welcome to A View from the Floor here at the New York Stock Exchange. I am joined by Robert Schein, Chief Investment Officer at Blanke Schein Wealth Management, and it's great to have you here all the way from California. Let's talk a little bit about the S&P 500. They are about to be 7,000, possibly ending the year. This is pretty extraordinary considering their performance in the past couple of years. How should investors interpret all this?
Well, performance has been strong the last few years, not just this year, which is welcomed by investors. And specifically, we have about 9 days left of trading days. So I think we could hit that 7,000. The Santa Claus rally sort of kicked into gear this morning with positive CPI information. So that kind of helps the Fed moving forward. But investors should be thinking about 2026 and how they want to invest and allocate their portfolios.
What do you make of the market now broadening beyond big tech? How important is this shift, and where do you see opportunities going into 2026?
It's extremely important to see the broadening out, right? For the last 2, 3, even 4 years, all we've seen is technology lead the way. That's not a bad thing, but it can't be the only thing. So moving forward, we saw the rotation the last few months out of tech into other names and other sectors like financials and healthcare, consumer discretionary, industrial. So all of that needs to broaden out, and that has to continue into 2026 for us to see sort of markets move higher once again.
Why do you think possibly if investors are over allocating their money market accounts, how could that hurt them in 2026 more than, say, volatility?
So we saw money markets were so far too, I guess, the best place for your money the last few years, if you will, just to keep your money on the sidelines and hang out and wait and get that 4%. That 4% is not there anymore. Banks not even paying 2% to 2.5%. So investors, you're going to have to think about their money market positions. I mean, we have got over $7 trillion to $8 trillion on the sidelines, both from the retail side to the institutional side. That will find a way where it's being better place for your money in 2026. So you're going to have to look at all the assets, all the asset classes that will stay ahead of inflation. We still have inflation everywhere we go. So what you and I spend money on, I got kids in college. I got, inflation's double-digit rate of return on the college side. So I still have to have that inflation hedge, or even on healthcare. So we have 76, million baby boomers. They spend all that money on healthcare every month, every year. That's double-digit rate of inflation. So money market's not going to get you there. So you have to think about other asset classes that's going to help get you sort of ahead of the inflation game.
Monetary policy has been a topic of conversation this year. It's also going to be in 2026. There's going to be a new Fed chair. There's going to be a new makeup of the board. How is that all going to affect the new year?
A different look and a different Fed for 2026. And, there's all this speculation right now, what it looks like. The take home point is that underneath the surface, the underlying data is still very supportive of the Fed. Whatever the composition is going to be accommodative. Now, historically speaking, when you have a new Fed chair, the bond vigilantes really take a test of sort of the constitution of the Fed and sort of where they're going to line up and how they're going to handle what the bond market's going to give them. So I can see that could be a little surprise for 2026, and we have to keep an eye on that when we have the Fed changeover. But that being said, you're still going to have an accommodative Fed, and the job markets are really what's going to allow the cover for the Fed to keep lowering rates, and that's going to put a bid under earnings for corporate America next year.
Robert, thank you so much. Happy holidays to you.
Same with you.
And that'll do it from the New York Stock Exchange here. I'm Michelle Yu with Asset TV. We'll see you next time. Take care.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.